Palo Alto Networks is scheduled to report third quarter fiscal year 2024 earnings results on May 20th after markets close. Investors are asking if they should buy the stock before that critical investor update. Now, I'll answer that question in this video. I'll also do a little preview of what investors can expect from Palo Alto Networks in the upcoming earnings release. And I'll let you know whether or not it makes sense to buy before, after, or not buy the stock at all. So let's take a look at the numbers first.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so its most recent quarterly release in the second quarter, Palo Alto Networks delivered $2.35 billion in total billings for 16% year-over-year growth. Remember this metric as it's going to be vital when I share with you the upcoming forecast of what to expect from Palo Alto in the third quarter. Total revenue came in at $1.98 billion, an increase of 19% year over year. Now, total billings and total revenue are closely related. Billings are the contracts that Palo Alto Networks signs during the quarter, and then those contracts eventually turn into revenue. For instance, Palo Alto Networks might sign a contract in May for 5 years and $500 million, right? But it doesn't record $500 million as revenue when it signs that contract. It records the $500 million as billings when it signs the contract. And then each and every month when it serves the terms of the contract, it then recognizes it as revenue. So the initial deal goes into billings and then it goes into revenue as Palo Alto Networks serves the contract. So billings are a great indicator of what revenue is going to look like over the next few quarters and over the next few years. That's why billings is a critical metric when you're evaluating Palo Alto Networks stock. Additionally, the company's non-GAAP earnings per share came in at $1.46, and that was above what it forecasted. It forecasted a midpoint of $1.30. The revenue and billings metrics came in roughly around the midpoint of Palo Alto Networks' expectations for the second quarter. Now, looking ahead, Palo Alto Networks is forecasting just 2 to 4% billings growth for the upcoming quarter. You could see that's a significant slowdown from the 16% in the second quarter. A big slowdown to be sure. Now, total revenue is also expected to slow down to 14% at the midpoint, and earnings per share growth is also expected to slow down at 14% at the midpoint. So the company is forecasting a deceleration in the rate of increase, and this billings growth, if it persists at this rate for several straight quarters, it's likely that revenue will continue to slow down and even turn negative, quite possibly over the next few quarters. Now, that would be a big change for Palo Alto Networks, which has been accustomed to growing at more than double-digit rates of top-line growth for several years now. The cybersecurity industry overall is likely to grow for at least the next decade, probably more, as more of our lives are becoming digital and cybersecurity is becoming a necessity, not so much a nice to have. Still, the cybersecurity industry's rate of growth may decrease over the next coming years because companies are investing so much in artificial intelligence. That money has to come from somewhere. And companies are looking at their budgets, looking at cybersecurity and saying, let's try and optimize a little bit here. Let's try and save where we can. And those savings are leading to disruptions industry-wide, which could be one reason why Palo Alto Networks made a dramatic change in strategy in the latest quarter. Remember I talked about that in the latest quarterly earnings update when Palo Alto Networks said they were going to go after a greater market share. They're going to offer their customers free trials to get them on board. So Palo Alto Networks offers several types of cybersecurity services, and their customers may go with Palo Alto Networks for one or two services and then go with the competitor for another one or two services. And so they may have their different providers for cybersecurity. Palo Alto wants to make their customers go with them for everything. They want the full suite. And to do that, it's difficult because a customer might have a contract with Palo Alto Networks for 6 months. They might have a contract with Fortinet for 9 months. They might have a contract with CrowdStrike and Okta and all of these other types of providers of those types of services, and their contracts are ending at different points in time. So if they were to just switch over to Palo Alto Networks all at once, they would be double paying for some of these services, which businesses do not want to do. So what Palo Alto Networks has said to businesses is, here's what we'll do for you. Let us sign you up. Let us set you up with our service, and you don't have to pay us until your contract runs out with your existing provider. So that's going to turn out to Palo Alto Networks offering a lot of free service over the next upcoming quarters, which is going to weigh down its billings, as you're already seeing here. It's going to weigh down its revenue, and it's going to weigh down its earnings because it's now providing these services for free. Longer term, it might work to gain market share for Palo Alto Networks, which will result in better growth and better profitability. That remains to be seen. But I raised this as a big risk for the industry because their competitor, Palo Alto's competitors, are not going to sit around and do nothing about this. They're going to retaliate. They're going to try and retain some of these customers with deals of their own. And so that's going to lead to increasing competition industry-wide. And you should know by now, if you've been a follower of the channel, competition is really bad news for investors. It brings down profitability industry-wide as they battle with each other to offer better terms to customers. That brings down profits for everyone. So that's what I highlighted as a risk in the previous quarter, and that's why I have not had Palo Alto Networks stock rated as a buy. I've kept Palo Alto Networks stock rated as a hold. Of course, it doesn't help that the stock wasn't cheap, and it hasn't been cheap for a while. Palo Alto Networks is trading at a forward price to earnings of 48, which is rather expensive on the forward earnings, and then when you compare it with growth expectations, it's rather expensive. So if I'm paying this expensive valuation, I want to make sure that everything is right within the industry, within the company, and that's not what I'm seeing with Palo Alto Networks. I'm seeing rising risks from competition. I'm seeing an industry slowdown in rates of growth, even though longer term the industry will still grow. The rate of growth I'm seeing slow down. And so I'm a little bit more cautious on the cybersecurity industry overall. I recently downgraded Fortinet stock. I used to have it as one of my top stocks to buy. I downgraded it to just a buy. And so industry-wide, I'm becoming a little more cautious on cybersecurity. So if I was to answer the question, should you buy Palo Alto Networks stock before earnings come out? I would say no. I'm keeping the stock rated as a hold. I'm updating that recommendation on May 12th. I will review Palo Alto's earnings results and update you all on how it went. I'll be paying close attention to that strategic change that Palo Alto Networks announced in the previous quarter. I want to see updates from management on how that strategy is going, what they're seeing in terms of response from their competitors, and what they're seeing in terms of response from their customers. So a lot of big items I need to see from management, which is going to have huge implications on my outlook for the cybersecurity industry overall, given Palo Alto Networks' leadership position in the industry. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.